Good morning, everyone. Thank you for being here today. My name is Kerry Blum. I run the Global Equity Structuring Group in Wealth Management at Goldman Sachs. And I'm thrilled to be here today hosting today's session on the road to IPO, which is a two-part session. We're going to start with Lizzie Reed, who will join me from Goldman Sachs, and then continue on with one of our founders here to kind of show you both perspectives. So first, I'd love to introduce Lizzie Reed. Lizzie is the global head of the equity syndicate desk at Goldman Sachs. She is someone who is very much at the center of capital markets activity, and we love today to share some of the insights that we're seeing now in the current market environment. So with that, Lizzie, we have been seeing continued improvement in the equity capital markets activity across products, including IPOs, with high-quality companies across various sectors achieving efficient access to capital and building their shareholder base. Can you tell us a little bit, contextualize kind of where we've been and what the year has looked like across the capital markets?
So first and foremost, thank you for having me. Thank you. It's great to see everyone. And I am, just to put some context around it, a very optimistic person as an individual, but also in terms of the outlook for the equity capital markets in 2025 and in 2026. To put some framework around it, these numbers will surprise you. So you see a lot of press that perhaps the equity capital markets are a little bit sluggish, a little bit slow, but in reality, we are definitely in a pace of, quite frankly, recovery, and we're getting into a very, very open window in the next 2 years. To put some numbers around it, because I do like numbers, Kerry, as you know, first and foremost, if you look at, and I jotted them down, global equity capital market issuance as the end of Q3 of 2024, we define that as cash, right? So common equity plus convertible issuance is actually up 40%. I think a lot of folks would assume that that's very much centered within the Americas, but in fact, globally, each region is up materially. So the Americas business is up 35%, Europe is up about 30%, and Asia is up about 60%. And so if you take a look back, and we recognize that 2020 and 2021 were peak years in terms of global issuance, 22 and 23 were obviously trough years or recovering years. In 2024, the good bellwether or benchmark to compare against is actually 2019 as a more normalized market. And as of Q3 of this year, we have actually surpassed 2019 volumes. That's a good sentiment in terms of how open the market truly is. The other thing we always talk about is IPOs. I love IPOs. They're so fun to work with and so wonderful to partner with companies. But even in the IPO space, global IPOs year over year is up 30%. IPOs in the Americas is up 53%, right? At Goldman, we've been fortunate enough to be on 11 of the top 15 largest IPOs year to date in terms of an active leadership role. And so we have a really good pulse in terms of how the market sentiment is shifting. And I would like to paint a picture for you of optimism and constructive outlook.
So we've got an improving environment globally, up year over year, pretty significantly across each region. And we've got very healthy issuance that has surpassed what we see in a normalized market. So fantastic to see both of those over the course of this year. What's the outlook then for 2025 with that backdrop?
Yeah, so like what are we celebrating in the IPO market, right? A couple of things we're celebrating. First and foremost, just increase in terms of absolute volume. So the more successful IPOs, the more that corporates and founders and sponsors and VCs look at it as a viable option. Number two, we're celebrating that the IPO discount, so the cost of going public, in 2022, 2023, that discount versus peer sets was more elevated. We're seeing that IPO discount basically compressed to more normalized levels. We're celebrating the broadening of the aperture of investors who are looking at the IPO space and equity capital markets as a viable investment opportunity, right? And we're seeing more, increased participation from mutual funds, from pension funds, from hedge funds, retail. It's really, really broad, and it feels much more like the normalized market that we saw in 2019. And in fact, some of our order books in some ways, in terms of depth of quality, feel like how they felt in peak market 21. And then we're also celebrating the fact that these IPOs are performing, right? So as an issuer, you are achieving better pricing. And also as an investor, you're seeing the returns of execution of those companies. And so while 2022 and 23 were challenging years from a just broad issuance perspective, I would say most companies that are going forward today, and it's very, very diverse across region, but also by sector, also diverse in terms of market cap, small caps, mid and large cap going public. It's really wonderful to see those companies operate through a cycle and are actually better companies today in terms of investor receptivity than maybe what we saw maybe in peak 2021 where valuations were stretched and maybe some companies weren't as prepared to go public as what they would have wanted to be. So we're seeing great fundamentals and obviously great outcomes in terms of the IPOs that have gone forward.
So maybe narrowing the lens a little bit and coming to a topic that I think could be relevant for many people in this room, given we're at the French Founders Conference here in New York. When we think about listing venue, acknowledging that there has been a lot of discussion around where multinational companies should think about, for those going public, should think about listing venues and how that could impact shareholder base, et cetera. What are some of the topics and themes that are coming up for kind of companies outside the US as they think about listing venues over the next couple of years?
We also, me and you, debate this a lot internally. So it's a really great question. So from my perspective within investment banking as an advisor, right, of companies who want to go public, first and foremost, we care about what is your objective? Why do you want to go public? What are you trying to achieve? And then thinking about how do you optimize those objectives in the markets, and finding the right listing venue is super important. So there are some issuers that have perceive that the US listed market might be deeper, for example, than the European market, even a specific country market. But I'm going to be really balanced about it, because if you look at just broad-based issuance, my colleagues in Europe are doing an absolutely tremendous job, and there have been some very, very successful large IPOs in Europe that have garnered the appropriate shareholder base and aftermarket performance and operating success to be very, very successful. So I'm not trying to dodge the question in any way, shape, or form, but we do have this healthy debate, right, with issuers and VCs and sponsors of how, what are you looking to achieve and how can we help you? Also, if you think about distribution of shareholder base, what I always remind everyone is that the lion's share of mutual funds, pension funds, directional hedge funds, all of them really want to just buy good assets, right? And so if I look at the order books, for example, of my team in Europe, when they allocate any type of equity capital raise, by the way, private markets and public markets, I would say that there is a tremendous amount of international demand from investors that might be domiciled in the US, but have an international type of bend and criteria in terms of investment strategy. And I think if you were to ask yourself, well, what percentage would that be? My instinct is that it's a lot higher than probably what you think it is. So I actually would highlight, one side is just figuring out what do you want to achieve. The other side is recognizing there's been a tremendous amount of capital formation in the investor community, and then their ability to move that capital into the best-in-class assets is actually significantly more fluid.
I think that's very insightful, Lizzie, because I think a lot of times there's sort of these high-level narratives out there, and you can get caught in those, but ultimately acknowledging that the objectives of the company are very important in identifying the right listing venue and the right path, I think is just absolutely critical. So thank you for that. You talked a little bit about the valuation spreads and what we've been seeing in this market when companies are coming public. Can you spend just a couple more minutes around how are we thinking about valuations right now? And in the context of syndicating equity deals, what is your investor base looking for as you think about bringing deals to market?
Yeah, it's a great question. I'm going to bifurcate it between profitable businesses and emerging profitable companies. That I think is one decision tree to talk about. I also think it's important to think about just broad-based multiples because they are, I would say, multiples can still screen a little bit rich, and maybe for some of our sponsors, they think that it's cheap. And so that's always a negotiation between what, once again, we're looking to achieve and how can you get there. But broadly speaking, from an investor insight perspective, it continues to be very consistent, right? They want good, strong top-line growth, strong multiples, expandable TAM, good free cash generation, appropriate leverage, right, for the business or the sector. And so and I think more importantly, when there are companies that maybe not have, on a KPI scale, 5 out of 5 things absolutely perfect, but 4 of the 5 are, or 3 of the 5 are, there still is a tremendous amount of depth in the market so that you can adjust for, going public with price and valuation. And so I actually think what I'm most excited about is that so many investors were, quite frankly, so focused on the top 7 or top 10 equities in the market, and now their aperture is broadening. And so, ECM as a new idea generation continues to be actually incredibly helpful in terms of deploying inflows of capital. The other thing I get asked a lot is, okay, well, if the market feels so good, why isn't there even more IPOs? Like, what's holding people back? And in a very simple way, I think that in 2021, expectations were very high. 2022 was really a moment of time that everyone came a little more insular. A lot of companies went to go just, execute and operate their businesses and think about kind of their capital structure. A lot of investors kind of, quite frankly, became more concentrated in their positions. And then in 2023, what we're seeing is companies, operating really, really well in that 2-year cycle, and 24 kind of coming out of the back half. We have an improving macro environment, and then also investors are doing the same. And so it feels like we're getting to the point where boards, corporates are actually understanding the importance, right, of finding the right valuation to curate the broadest shareholder base to start off, said company in a very successful way as a public entity. And so I think it's been a really demanding but important educational process for everyone to slow down a little bit and kind of think through objectives, think through what's the goal here, be very thoughtful about the market, really engage with the investor community in a way which is enhancing for them, being good listeners, pushing appropriately. So I think it's been a very good cycle to kind of find the equilibrium again.
And then certainly the improving macro backdrop has been incredibly helpful for issuers, for investors, et cetera. In the very near term, though, we have a couple of catalysts that we need to be mindful of, whether that's the US election or the geopolitical environment globally. How do you kind of balance the improving macro environment when you're guiding investors and companies with thinking about, well, the macro environment's improving, but there is the potential for near-term uncertainty with some of these big events that are on the radar?
I think in the IPO space, like what's dominating issuance is probably a good way of thinking about it. So if you look at 2024 issuance year to date, about 15% of that is in the IPO space. If you look at a more historical average, IPOs typically equate to 20 by 25% of global issuance, right? So IPOs are clearly trailing, which is actually a good setup for 25 and 26 as the macro continues to improve. So there's lots of room there. I think in the very near term, when we're navigating macro catalysts, I think the majority of issuance in Q4 will skew towards fast to market, limited market risk type of opportunities. So follow-ons, blocks, convertibles, where you're in the market for one day, right? You're not in the market for 5-7 days in terms of what you're exposed to. Having said all of that, I think it's really tremendous because every 4 years in the US, we navigate an election cycle. If you actually, I was reading one of our economists who highlighted this, the pure number of election cycles globally this year is almost like all-time highs. And so from that perspective, I actually, once again, go back to my optimism statement at the beginning. It's incredibly, I'm so, inspired to see how investors successfully navigate, right, a macro which is always evolving. For our non-profitable or emerging profitable companies, I think that tends to be skewed towards the second half of 25. Not every company is created equally. There are companies that can go public, right, that are non-profitable or emerging into profitability. And so I think a little bit is about picking your window, being disciplined, being ready to proceed forward. And if everything aligns in terms of your objectives, there's certainly capital to go and go public.
And then maybe before we wrap here, Lizzie, we spent a lot of time talking about IPOs and backdrop for companies going public, but we know there's also been a significant amount of narrative around the evolution of the private markets. So any trends there that you'd like to share that you're kind of watching and way that we think about guiding clients around the different alternatives that have developed over the past kind of few years?
Yeah, so I'm approaching 10 years within equities at Goldman. It feels like 25 just because it's where we are. But having said that though, I would say the best part about being in a seat that I am is that the equity markets are incredibly innovative. And particularly in private markets, the maturity of structure, the maturity of that market has rapidly improved. And so we've seen a lot of issuers, for example, that might like to go public, maybe not in 24, maybe not in 25, but maybe in 26. And for example, they want to create some liquidity for their employees. And so they might do a secondary raise to give back some capital and returns to their employees and incentivize them, right? I think that's pretty incredible that it provides a lot of issuers depth of menu of options, right, on how to raise capital and how to, award your existing employees, how to think about curating a shareholder base. And so from my perspective, I think the fact that that market has become so dynamic and there's a lot of capital in it is something which is going to be very, very, constructive for the coming years. I don't think that goes away. I think it just gets bigger.
Well, with that, Lizzie, thank you very much for being here and for sharing your insights. It was an absolute pleasure to have you.
Thank you.